Hi, good evening everyone, and welcome to this evening's personal tax revision session. Tonight we're going to be looking at task 2, which is income from employment. Okay, so this is the task that we're going to be looking at. So it says that Claire had the use of an Audi company car from the 6th of April 2023 to the 5th of January 2024. The company paid for all running costs, including private fuel. She contributed £80 per month towards the cost of providing the car and £50 per month towards the cost of the fuel. The cost to the company of the private fuel is estimated to be in the region of £900. Claire was provided with a second company car, BMW, for her husband's use in June 2023. The company received a 5% discount on the list price of this car, and Claire's husband paid £3,000 in June 2023 towards the purchase cost of the car. Claire's husband does not work for the company. He contributed £50 a month for insurance of the car and reimbursed the company for the private fuel. The BMW was registered after the 1st of September 2017 and meets the RDE2 standards. And then we've got a table here that's got the two cars, the period for which they were used, the list price, their CO2 emissions, and then the type of diesel. And then we've got the task. So it says to complete the following table to show Claire's taxable benefit for the car for 2023 to 24. Show monetary answers to whole pounds. Make sure if you're given any instructions regarding rounding within the task, make sure you do follow them so that you don't lose any marks unnecessarily. So here it specifically says we need to round the answers to the nearest whole pounds. And you can see here we've got both cars, and then we've got the percentages that we need to work out for the car benefit, and then we've got to find out what the taxable benefit is for the car and for the fuel for each of them. So first of all, the Audi then, we need to calculate what the appropriate percentage is. The percentage will always be worked out based on the CO2 emissions. So we can see here that we're given 139 grams to a kilometre. The first thing, so remember we will always round it to the nearest 5. So for the Audi, so 139 will be rounded to 135. Now, when it comes to working out the percentages, always refer to the reference material. So because it's 135, it's going to come into this bottom category. So if it's 55 or more. So for the 55, it is 16% plus 1% for every extra 5 grams to a kilometre above the 55. So going back to the task. Oops. So any excess above 55, we need to add 1% for every 5 grams to a kilometre. So we will do 135 minus 55 equals 80. Then our 80 divided by 5 gives us 16. So we've got the 16 that's for up until the 55, and then we've got our excess that we've just calculated of the extra 16%. Now, as well as this, we would have to have a look at the task to see if there's anything else that we would need to allow for. If we look back at the table, we can see that the type of engine is a petrol engine, so we don't need to do anything further here. But if it was diesel, then there is a possibility that we would have to add on an extra %, which we'll have a look at once it comes to the next car. So it's just a 16 plus 16, so it's the 32%. So we can go ahead and we can write that in. Next, we need to work out what the taxable benefit is on provision of the car. This will always be based on the list price of the car. So it's not about what the employer actually paid for it. They may have paid less than what the list price is, but we always based it on that list price. And we can see here that in the task we're given £37,000. Now what we need to watch out for here is if Claire's made a capital contribution towards the cost of that car, and we can see that there isn't one here. She has made a contribution towards the cost of providing the car, and she's also made a contribution towards the cost of fuel, but she hasn't made a capital contribution on the purchase cost of the car. So it's just going to be based on that 37,000. So 37,000 times our 32% equals £11,840. Now that's for a full 12 months, for the full year. But when we look at this table, we can see that she only used it from the 6th of April to the 5th of January. So for 9 months. Don't forget to apportion it by the months used. So it's going to be the 11,840 for 9 months. So 11,840 divided by 12 months times by our 9 months equals £8,880. Now if we scroll back up, we can see that Claire contributed £80 per month towards the cost of providing the car. So at this point we need to allow for this contribution that she's made towards the running costs of the car. So £80 times our 9 months equals £720. So we need to deduct this. £8,880 minus the 720 gives us the taxable benefit of £8,160. Can go ahead and write that in. Next, we need to calculate what the taxable benefit is on the provision of the fuel. Now, if we go back to the reference material, so when it comes to the fuel benefit, it is always based on this base figure that you're given within the reference material. So for the current Finance Act, it is £27,800, and that will be times by the percentage that we've already calculated, the car benefit percentage, which was 32%. Now we are told in the question that she made a £50 per month contribution towards the cost of fuel. Now a contribution towards the cost of fuel we would ignore, we cannot deduct it. So the fuel, that would be 27,800 times our percentage that we already calculated, which was 32%, equals £8,896. But remember that that's for 12 months, and she only used the car between the 6th of April to the 5th of January for 9 months, so we need to allow for that. So we've got 8,896 divided by 12 months times our 9 months gives us £6,672. Okay, now moving on to the BMW. So the BMW we're right over here. First of all, again, we need to work out what the relevant percentage is. Remember, that's worked out on the CO2 emissions. We're told for the BMW, CO2 emissions are 224. So we need to round that to the nearest 5. So it will be based on 220. Going back to the reference material then. So again, it's going to be under the last section, it's going to be under the 55 or more. So for the first 55, it's 16%, and then any excess above that will be 1% for every 5 grams. So we would do the 220 minus 55 equals 165. Then 165 divided by 5 equals 33. So we've got our 33% plus the 16% that's up until the 55. And then looking back at the table, we can see that we're told that it's a diesel engine. Now if we look at the reference material, for diesel engines we need to add on an extra 4%, unless, so it says here that the additional 4% will not apply to diesel cars which are registered after the 1st of September 2017 and meets the RDE2 standards. If we look back at the question, so it says that the BMW was registered after the 1st of September 2017 and that it meets the RDE2 standards. So we don't need to add on that extra 4%. So the 33 plus 16 equals 49%, although remember that it is actually capped. So it's capped at 37%. So we can go ahead and write that in. And then we need to work out the taxable benefit on the provision of the car. So the list price, we're told, is £24,000. So we have list price 24,000. Then we need to check back at the question. So it says that the company received a 5% discount on the list price of the car. So remember, any discount you would need to ignore. It's not about the price that the employer paid. It will always be calculated on that list price that we're given. Now, we are told that Claire's husband paid £3,000 in June 2023 towards the purchase cost of the car. So he's made a capital contribution of £3,000. We can deduct that from the list price. So 24,000 minus the 3,000 gives us 21,000. So 21,000 times our percentage that we calculated, which was the 37%, gives us £7,770. Remember though that is for the full year, so make sure you check how long they've actually owned that car for. And we are told here that the BMW was owned between 6th of June to the 5th of April. So we need to allow for those 10 months. So 7,770, divided by 12 months times by 10 months equals £6,475. Okay, and then we've got the fuel. Oh, sorry, we haven't deducted his contribution yet, have we? So that's not right. Okay, so the next bit then. So the 6,475 then, that's what we've calculated so far, allowing for 10 months use of the car. However, we are told in the question that he also, as well as making the capital contribution of £3,000 towards purchasing the car, he's also contributed £50 a month towards the running cost of the car. So we can also deduct that as well. So £50 times our 10 months that he's used the car for gives us £500. £6,475 minus that contribution of £500 gives us a benefit of £5,975. And now we can work out what the taxable benefit is on the fuel. On this one, we are actually told that a husband reimbursed the company for the private fuel. So because he's reimbursed all of it, there is no taxable benefit. Total taxable benefit, so 8,160 plus 6,672 plus £5,975 gives us £20,807. So moving on to part B, it says, which of the following are assessable benefits in kind? So first of all, we've got an annual staff party which cost £120 per head. So this one is allowable as long as it is below £150 per head. If it was over, then the full amount would be taxable. Then we've got canteen meals available to directors. So this one is an assessable benefit because it's only made available to directors, and for it to be an allowable expense, it needs to be available for all staff members, not just the directors. So staff uniforms, that's not accessible. An interest-free loan of £11,000. Yes, this one would be. Any loan up until £10,000 would be exempt, but once it gets over £10,000, it would be accessible. A company van which the employee uses at the weekend for private use. So because it's got the weekend private use, this would be an accessible benefit. And the last two, so the provision of a late night taxi for an employee who had to work late as a one-off and missed the last train home. So that wouldn't be accessible. And then the employer pension contributions of £3,500, so they would always be exempt. So looking at Part C. On the 6th of July 2022, James was given use of a projector to use at home privately. The market value of the asset when it was provided was £4,000. James continued to use the projector privately until he bought the projector on the 6th of December 2023. So James continued to use the projector privately until he bought the projector on the 6th of December 2023 for £800 when the market value of the projector was £2,000. What is the assessable benefit in 23-24? So he had use of the projector from the 6th of July 2022. So we need to calculate what he's been taxed on since having use of that asset. We're going to look at tax year 2022 to 23 first. So the market value of the asset when it was first provided was £4,000. It's going to be 20% of this, which gives us £800. Now that's for the full year, but he didn't have use of it for the full year. It was only from the 6th of July, so therefore 9 months. So 800 divided by 12 months times by 9 months equals £600. Then we need to work out what the tax is due for the use of the asset for the current tax year. 2023 to 24. So again, it's going to be 4,000 times 20%. So that gives us the 800. Now he only used the projector until he purchased it on the 6th of December. So in this current tax year, 23-24, he just used it for 8 months. £800 divided by 12 months times by the 8 months gives us 533. Okay, so now we need to work out the benefit on the purchase of the projector. So we need to make a comparison here. So first of all, we need to look at the market value at first use. And this was the £4,000. We need to deduct any amounts that is already been assessed on. So less previously assessed. So he has been assessed £1,133. That is the 600 that he was assessed on in 22-23 plus the £533 that he was assessed on in the current tax year. Now we would also need to deduct from this any contribution. And the contribution here is the amount that he paid for the projector on the 6th of December, which we're told was £800. So this gives us £2,067. And we need to compare this to the market value at acquisition. And this, we're told, is £2,000. From this, we need to deduct his contribution, which was £800. So that gives us £1,200. And we would compare the two. So we would choose the greater of. So the greater of the 2,067 or the 1,200, which of course is the 2,067. So the assessable benefit for tax year 23-24 is the 2,067 plus any tax for the use of the asset before he purchased it in the current tax year, which is this £533. And that gives us £2,600. So looking at part D of the task now, James also had use of non-job related accommodation for the entire year, the annual value of which was £6,500. In 2013, the employer purchased a property for £150,000 and the market value was £230,000 in 2021 when James moved in. The employer added a garage to the property in September 2023, which cost £12,350 and provided furniture which had cost £27,000. Now, because the property had cost £230, there's going to be an extra charge involved here. So we would do the £230,000 minus £75,000, and then we need to times it by the official rate of interest. This you're always given within the reference material. So I think it's the other way. Make sure you always refer to this reference material within your assessment. So it tells us here that HMRC's official rate of interest 2.25%. So £230,000 minus £75,000 times 2.25% equals £3,488. So that's our extra charge, and we need to add to that the annual value, which we're given in the question, as being £6,500. And that gives us £9,988. Now we're also told that the employer added a garage to the property in September 2023. Now, because this improvement was done in the current tax year, we can't include it. It would only be if the improvement was made in the previous tax year, then we could also add that on. Whereas the garage, because it was done in the current tax year, that would be assessed or added on in the next tax year. So we need to ignore it for this one. What we do need to allow for, though, is the furniture. So he's provided with furniture which had cost £27,000. So the use of the furniture is 27,000 times 20% is £5,400. So the £9,988 plus our 5,400 gives us an assessable benefit for the accommodation of £15,388. And then moving on to the last part of the task then. So it says on the 6th of May 2023, James borrowed £15,000 from his employer, and on the 5th of April 2024, he repaid £3,000. He paid his employer 1.25% interest on this loan. So calculate the assessable benefit for 23-24. So with this then, we always start off with the opening loan balance. And the opening loan, £15,000. Then we look at what the closing balance is on the loan. And we're told within the task that he repaid £3,000. So the closing balance is £12,000. 15,000 plus £12,000 gives us 27,000. And then we need to divide that by 2 to get that average. Gives us 13,500. Now remember that the official rate of interest is 2.25%, and his employer is giving him the loan for 1.25%. So that is a difference of 1%. So we would do 13,500 times 1% equals £135. But we need to check how long he's had it for, because that £135 relates to the full year. But he only borrowed it on the 6th of May. So therefore, 11 months. 135 divided by 12 months times 11 months equals £124. So that would be our assessable benefit. So thank you very much for attending this evening's personal tax revision session. Hope to see you all again soon.